Good morning, everyone. Welcome to our Monday morning trading session. Allow me to get the screen share going on here. All right, boys and girls. So we're looking at a market with a little bit of an opening gap here. This was Friday's session. You can see very sideways. Price is leaving off up here, however, around the 51.64, 65 area. And we're opening down here around the 51.45, 46 area. I forget exactly what the opening price was. I think 51.46. And now we're falling off a little bit. You'll remember that a few days back we did have a gap in the market. I think it was from Thursday's session. So it looks like we may be trying to get into that. But we're just a few minutes into the day, so let's give them a moment. It is Monday. Going to be a flood of orders hitting the floor. The market's likely to drift a little bit out of the open and then try to recover. We're getting a first micro macro cross here. What time is it? Oh, we're only about 3 or 4 minutes into the session. All right, well, we got this. Oops, hold on a sec here. I'm busy loading my trade manager onto my other charts, and that's going to be an expensive little error. So I wanted to get on board this first micro macro cross signal. I was going to take it below the low, however. All right, well, we'll just wait for the next signal then. Getting some decent follow through on that move. So we hit our first profit objective and then some. Okay, here on the Eagle hasn't produced that first signal that we were looking for. I suspect it tried to produce right here, just prior to the open. We had the counter trend signal. You see very often what happens is you'll get a counter trend signal and then you'll get a with trend signal. This one did not complete either, but we did get the warning dot. So the Eagle, not all the parameters there, even though there was decent follow through on that. We did get a signal here in the Falcon. And pre-market, we got a number one cloud crossover signal in the Raptor. Crude oil on the Hawk also producing a first micro macro cross signal now. Let's just get on board here. I'll adjust my stop if we get into this trade. Now this does have the potential as well to move a little further, so maybe I'm going to try to run this one out. I'll take my break even a little deeper, maybe down here. Just making a couple notes now in my trading journal. Now we're getting that little bit of a reaction. So I think I'm going to pop this trade now to break even. And we'll hold it there. They seem to be holding here around this 52, 70, 71 area. We need to see them obviously break through there. Let's see if they can hold. Nope, they can't. Or not yet anyway. Oh, way to go, Francisco. Francisco short on the NASDAQ. Oh, he got an eagle signal at 51.39 3/4. That's right around here. Good for you. Yeah, that would be that first eagle trade of the day. Let's see if that's hit the profit target yet. Oh yes, I think you're well there. Oh yeah, nicely done. It's a nice way to start the morning. Good question here from Mr. Buckaloo. He's asking, Eric, do you ever get concerned when the markets move through 3 or 4 levels of support, or do you just keep taking the DTS signals? Well, I don't get overly concerned. There's an expression that says a bull market knows no resistance and a bear market knows no support. And you can see this is kind of the case today, where we're very much in a bear market to start the day. So its support is going to be less influential on a day like today than resistance. The support and resistance lines are forecast values, right? These are predictive values. And as anything that is predictive, there is a chance that you could be wrong, even though, you know, they're pretty darn accurate. They're turning the market or holding the market at those particular levels. But to answer your question, no, I don't get overly concerned. Just because the market has moved sharply, we are now 1, 2, 3, 4, 5 full zones below the primary support zone. Trading, again, is much more reactionary. You want to react to what the market is doing. Well done, Tony. Nicely done. Tony says, I was able to catch that NASDAQ Falcon and Hawk with a multi-contract trade for a 4-figure profit. Done for the day. Nicely done, Tony. That's the way to do it. 15 minutes, get in and out. See you later. Yeah, it's all in the multiples. You know, when you can start to trade a little bit of size, you can take advantage of, you know, these strong moves when they come your way. Tony says, gotta love this business when everything goes right. Yes, sir. It is a great business, that's for sure. All right, it's starting to look like we're getting a little bit of support. They finally bottomed out here around the 51.15 area. Don't think we're going to see a full-on reversal from here, but perhaps a pullback here into the cloud. Maybe we'll get a hard edge bounce. That'll be on our Raptor, of course. Unless the buyers step up in a serious way here, I think this is going to be a full-on bear market today. Crude oil still trickling lower. Yeah, good question. Mr. Buckaloo is asking, what do we think about this gap up here? Well, gaps do fill. They don't always fill immediately. I guess the gap actually looks something like that. So is it likely we're going to see 5160 today? Probably not. Not today. This gap that we're filling now, I do believe, is from, like I said, last Wednesday. So we'll just wind back the clock here. So there's Friday. Thursday, here's Wednesday's session. And we closed down here. And we opened somewhere around here. So this, again, not a huge gap, about 20-point gap, but it hasn't filled. See, the market just stayed above it, floundered quite a bit, and here we are. Now we're into that gap. So I suspect a similar thing is going to happen, but in reverse. Now that the market is a little bit more bearish, once we see the market go sideways, struggle to get lower, there could be a push higher, kind of the last gasp. And then the market will try to get back into that gap. Now, if it succeeds and trades through that gap, well, then we are back into a bull market. But if it fails when it gets up there, then we're probably going to see a little bit of a downward bias, at least for a few weeks. But this is a very strong start to the day for the bears. Price has been falling now for a full 20 minutes. That's significant. All right, a little bit of a pullback now. I think that gap that we're looking at this morning, well, I was going to say it looks a little bit more substantial on the E-mini, but maybe not. E-mini already having a little bit of a downward bias to it. This macro pullback signal spoiled by the yellow bar. Falcon getting a little bit more bullish. And waiting here on a Raptor signal, perhaps a double pullback style signal. Tony's asking, Eric, how do you feel about yellow bars in the Raptor? The yellow bars don't affect me as much on the Raptor as they do on the Hawk. Because of the programming, the yellow bars very often develop at or very close to a signal. On the Hawk, they're showing a conflicted market, a market that's not committed. But that's not always the case with the Raptor, as you can see. All right, well, this would be a great number 2 if we get the buy signal now. In fact, it might even be easier to buy than to try to sell, even though the trend is down. And I do expect more of a move lower. Okay, so the yellow bar spoiled the macro pullback signal in the Hawk. That's good. I don't need to worry about that now. I can concentrate now on the trend change signal that's brewing here in the Falcon and a possible number 2 signal here in the Raptor. So just going to check my settings really quick to see when I have them on now. I forget. Okay, so I'm running the 1.25. Oh, here come those sellers again. They are not walking away from this. The problem with this trade is where to cover the position. Right? Ideally, we should cover way above the high of the morning, and that's not feasible. Not at 2% of our capital at any rate. Maybe a second push entry is the way to go. It should. Boy, oh boy, what a balanced market right now. All right, we do have a chance to add a second push signal. Oh, and I better hurry. All right, this is a little bit of a crapshoot. We'll see how the market reacts when it gets back down here toward the lows, whether it will see some follow through. It is the top of the hour, where typically we see the market put in tops and bottoms. I'll try to run this out, see if there's anything left. And you can see we're now at the bottom of the day. My concern, of course, is that this may turn out to be a test of the extreme. The market can rally up higher. Given this very, very strong downtrend, I think the sellers are going to give me at least one more push. They're not just going to walk away from this. So I'm looking for that as a cue to adjust my stops. And I suppose I should, well, we'll go with the ATR. Last chance. Last chance for the sellers to get a hold of this market. Otherwise, this is going to be a double bottom type formation. And it will be time to go. is. There's the number 2. Well, I'm currently short, so we'll have to hold on here. And we'll talk about this a little bit more tomorrow with the number 2 signal. Context is very, very important. So we've got a very strong downtrend here. We do have all the elements of a number 2, don't get me wrong, this is a buy signal, but this is a good opportunity maybe to use a second push entry. So the signal has engaged, the market has retreated from the signal. Go ahead, place your buy order above the high of that bar. Look for the renewed momentum to bring you in, if there is going to be some momentum there. The traders are just burning it up in this level right through here. What a fight. Come on, we got to take out that low. I think the sellers know they're on the hook here. If they can't take out this low, then we're definitely going to see a rally. Oh, and there we are. Just sitting on the low. Come on, one more bar, and there we go. I'll take the trade to break even now. How I was saying earlier that a bear market knows no support, a bull market knows no resistance. Well, we're in a bear market. The market's broke through the support line. Notice how the support line now acted as resistance and actually held the market down. So chances are we will see a failure here on the support here at the 5102 area, or pardon me, 5103 area. But once we get below, we may see a similar reaction. This is also the type of day that we're very likely to see a counter move about an hour in. So at the bottom of the hour, 10:30 Eastern, 7:30 Pacific, we're probably going to see a little bit of a hiccup, a little bit of a push higher. Are we at our profit objective? Oh yeah, we're there. We have hit our high probability profit target. I'm trying to get a little bit cute, see if I can't run this out any lower if they're going to keep going. So it looks like 5103 quarter right now, essentially 5103, the big obstacle. And you can tell by the pace of the bar as well. It's just taking quite a long time to unfold, but look at the bid and ask, it's just flying. There's a lot of trading going on here. Daniel asks, if you weren't in the market, do you enter below the low? Well, it's possible. The problem we're experiencing now is, do we still have enough downward momentum? Or somewhere through here, the buyers are going to show up. You know, we've already got one counter trend signal. I'm a little bit late on this, but Francisco says we also had a signal here on the Falcon, and yes, we did. We had the late filter entry signal, which tends to be a high probability signal for us. That occurs when the trend line does not change color, but the filter goes out of sync and then comes back into sync. Very important that it comes back into sync. And you can see we've hit our high probability target, and then we're just waiting for the next opportunity. Tony says we've also had 3 macro pullback signals. 1, 2, 3. Yeah, they've kind of turned into yellow bars, which suggests that they traded a little bit too high to stay macro pullbacks. No, big yellow bar macro pullback just before the open. All right, well, they're pressing. Here we go. All right. Okay, I'm going to switch to parabolics now. Let's try to protect a little bit more of that open profit. Oops, wrong button. Francisco looking at a daily chart. I'm assuming it's daily chart. He says, looks like there's support going back to January the 25th. Yeah, that's last Wednesday. That's the gap that we pointed out. And he also comments that the NASDAQ looks like it's in an up channel and has bounced off the upper line and is coming down. So far, so good. There you go. Tony says the pending home sales came out at the top of the hour. That probably accounted for this little bit of a sideways drift we experienced. The buyers showing up now. 5100 is my stop. And I may hold the parabolics there just for a moment. See, this is the difficulty when you're running a single contract, of course, is you don't have the option of locking in profit on some and perhaps running a deep stop on the other. But I do think we are due for a little bit of a pullback here. How are we doing so far? Well, we're doing okay. All right. Well, that was a decent little trade for us. Mr. Buckaloo asks, isn't this last push down probably printing a bullish momentum divergence? Yeah, it could be. It could be. I haven't. Here, we'll throw... let's put a MACD on here. Where are you? MACD usually pretty good at spotting divergence. And let's change some of these colors, make it a little easier. So divergence occurring when prices go lower, but the indicator starts moving higher. Actually, surprisingly enough, no divergence. You got to go way back. These lows here versus these lows here. So actually pre-market to spot any divergence there in the MACD. RSI might show something a little different. RSI also very good at picking up divergences. I think, though, what a lot of traders are thinking is that, you know, the bottom of the hour, we've been in a downtrend for a full hour, and I think the buyers are going to finally step up, and there's going to be a little bit of profit taking, maybe not so much buying pressure, but traders are going to say, yeah, okay, you know, we've been short since the open, let's scale out of our position, because this is what you know, what the big traders are looking at is they've been short since, well, since the opening bell. So that is about there. So let's say you got short right from there, and your stop loss was up here, and now the market is trading down here. Okay, so you've got about $1,000 per contract in open profits. Not to mention, let's say another $400 in risk. So you've got essentially, rough math, about a $1,400 position here. That's a lot of open risk, right? So how are you going to reduce your risk? Well, you can bring your stops in tight. That's what most of us like to do. But of course, if the market isn't finished heading lower, you don't want to get stopped out prematurely. So what else can you do? Well, you can scale out of your position. Now, they're not going to be trading singles. They're going to be trading, maybe 100 contracts that they've scaled into. They can't drop 100 contracts on the NASDAQ. Or let's say this is the E-mini, where you can drop 100 contracts and the market will just pick it up. But what they'll do is they'll scale out of part of their position. So they'll say, okay, well, let's take profit on half of our position. So they may start taking profit on 50 contracts. Right? We're going to assume there's 100 in play here. So you're taking profit on 50 contracts. Those are buy orders, aren't they? Buy orders tend to make the market go up. That's how you get pullbacks. That's how you get ABC corrections and Fibonacci retracements and all those other good things that traders use to predict what the market might try to do next. But behind it all is just simple trade management. The market does not make an ABC correction because Elliott says it has to make an ABC correction. The market makes an ABC correction because there's some profit taking going on. There's some profit taking, then there's some additional selling, then there's some active buying and last minute profit taking, and then the market resumes the trend. ABC correction, down the market goes. 50 or 38% retracement, 50% retracement, 62% retracement. The market is taking profit. If there's more profit taking, well, then prices are going to go deeper, aren't they? If there's less profit taking and more aggressive selling, then the retracement will be more shallow. See, there's a reason behind all of it. And once you understand the reason, once you understand what the market is doing, it makes it a little bit easier to interpret what's going on with the pricing as well. Francisco says we're getting a macro pullback signal here on the Hawk. Yes, sir, we are, but again, we're almost an hour into the session, so I think it's going to be profit-taking time. I think we're going to see traders try to rally this market up a little bit. Don't be surprised if this macro pullback also fades and turns into a yellow signal. It's just my opinion, but if I were in charge of a fund and I had a large open profit position, I would be taking steps to protect my profit. So the macro pullback signal not triggering just yet. It has printed, it hasn't tripped. Might even work into a 4-arrow consolidation, but we would really need to see some aggressive selling. All right, here's the number 2 signal coming now, our counter trend signal. Oops, let's just take profit here. And I'm just going to go in with a single because this is counter trend. And here too, we got a chance for a second push entry. See, the market's printed the signal fading a little bit. I could have taken that signal a little earlier, I suppose, a little bit far away, but that's what we got now. Okay, keep going. Come on. Just making a couple notes here in my trading journal. Yeah, Tony, you're right. Tony says, man, what a difference it makes to have a market that's moving. Darn sideways market takes all the fun out of trading. You are so right about that. We may have to help them along here a little bit. We'll give them a little bit of a push with the mouse. Right now I'm wishing I had taken the earlier entry. I know it's only a few ticks, but still it would give me just a slight cushion. Come on, get up there. Just give me another bar or two. Come on, take out the high. This little high of the bar here, 5106, a little bit of a stumbling block. You guys are taking too long. Counter trend moves shouldn't hesitate quite so much. See, here we are, 51.06 half, and they flinched again. It will help them get up there. Come on. Get up there. Kissed it again, 51.06 half, or pardon me, '05 half. I'm looking for 51.06. There's 5 half. Doggone it, get up there. All right, big push. There we go. Okay, we should be all right now. Really? I know I'm a little tight with my stop. The best stop placement, believe it or not, is still the original. I just don't feel much like giving them all that much wiggle room here. And I think I'm going to get tapped. Unless we see some serious buying come into the market here in the next few minutes, I think I'm going to get tagged. Nope. No, they're not going to let me ride this out. And like I said, I don't feel like pulling my stop way back down here to where it was. Come on, get up there. Geiger counter fairly neutral here at the moment. Oh, wow. This may turn out to be my luckiest trade in a while. Now we need to get above the high here at 5106 quarter. Oh, you guys, you're killing me. You know you're going to go higher. Just go ahead, trade 5106 half already. Everybody knows you're going to go up. Just go up. So where are they heading? Well, they're probably heading here to the hard edge around 5114, 5115. Our support line, which will be resistance, is at 5115 3/4. That is also a likely objective. I'm trying not to get greedy here, just looking for a little bit of a swing target. But I do need one more bar. And here they're back. They're back. Okay, well, that wasn't, it was a little painful, but not too terrible. 5102 quarter got tagged. All right. Well, now the big question is, do the sellers really have the market back in hand, or is there going to be another transition higher? I really thought we'd see more of a reaction to that. To this soft edge buy attempt. I really thought we would see more of a rally, especially given that it was an hour into the session. In fact, I'm going to look for a second push on this one. So I'll let the signal engage. And it has engaged. We'll see whether or not it pulls back a little bit here, or if they fake me out. Stinkers. All right, Francisco says we also had a buy signal here on the hawk, and we did too, a first micro macro cross, which we know tends to be a high probability signal. Again, some of these things we need to gauge in context. So we're going to get a red bar buy signal here on the hawk, which will allow us to get in a little bit earlier if you were inclined to try to source out the bottom. I don't think I will go with a 3 contract position though. It is counter trend. Tony says, my wife heard you say stinkers. She says, I love it when he talks dirty. You'll have to tell Mrs. Gray that it is a G-rated program. We have to behave. All right. We're going to, I'm going to pull the profit target on that. We just hit the scalp target, but I'm really going to try to run this back up here to the high now. So you can see still a little bit bullish, trying to take advantage of that number 2 signal that we had here in the hawk. This one right here. Okay, we do need to see the market trade above this 5106 swing that we had. Yeah, Francisco says we had a sell signal here on the Eagle. What I would do is I would use the ATR though, rather than sell this, which is against the ATR, because the market does seem to be slowing, right? This was the first leg down, rather substantial. A little bit of a hiccup, second leg down. We know that very often we only get 2 legs in the Eagle before there's some sort of pullback. I'm not saying we're going to see a full-on retracement, but a pullback does seem likely. Therefore, I would use the ATR line to sync up before I considered the signal. That would essentially make this the signal bar. So you would want to enter below the low of that bar and probably not 1 tick below, because that's going to give you a fill right here. And now, I'm not saying the market won't go lower. It certainly can. But it leaves you in a position, where do I cover this trade, right? I think that's the biggest problem with this Eagle trade. It's not so much where do I get in, but where in the world am I going to cover this thing? At the very least, you want to cover to the hard edge. Maybe even above this little swing high if you can afford it, which I can't. The buyers and sellers still fighting it out here. Yes, I think so. Francisco says the market consolidating maybe. I think they are taking a little bit of a breather, a little bit of profit taking, as we mentioned before. I think the overall trend is down, but short term, I think we're going to see a little bit of a rally, probably back to the, well, like I say, at least the hard edge. So around 51.12. That seems likely. A more ambitious target, 51.15.75. See, we're swapping signals now. We got a number 2. We got a number 3 to sell. Now we're back with a number 2. This is a situation where the buy is a little bit easier than the sell because we know where to cover the trade. The unfortunate part with the buy is that it is a counter trend signal. Come on, get up there. Man, I really didn't want to pull out the mouse to have to influence the market, but it looks like they're going to need a little push, so we'll give them a little nudge here with the mouse, make it go higher. They're pressing. All right, here we go. So first obstacle, 5104. Oh, come on. Got a nice little consolidating triangle going on. No, I'm not liking this. going to lose it here. Buyers are losing their grip. We've got a bearish swing right here. Generally speaking, whoever controls the last swing controls the market. So at this point, the sellers controlled. At this point, the buyers controlled. Now the sellers are back in force. And hopefully that will be a bullish swing. Also give me a little bit of a double bottom type formation. Tony's asking here about the Raptor printing all these signals one after the other. Tony asks, when the Raptor is making several signals close together, does that show you a sideways market forming? Yes. Yes, when we're printing signals and not getting adequate follow-through on them, then that's definitely a market that is conflicted. Nuts. They're going to stop me out here in a second. Well, we're holding, but just barely. You can see here on the Hawk and Falcon and Eagle, we're also getting, well, not so much on the Eagle, but certainly on the Hawk and Falcon, we're getting conflicting information. The Hawk now moving to a first micro-macro cross lower, the Falcon giving us a trend change signal lower, as well as a late filter entry signal. And the Raptor here now moving between counter trend signals and with trend signals. And overall, the market's still all over the place. Yeah, Francisco says all the birds are pointing down. Yes, they are. Like I said, we got to consider the context a little bit as well. Not saying the market won't go lower. It certainly can. All right. This might be the second effort on the bulls to rally the market. Got to get above 5104 or all bets are off. We'll stay with it for a few more minutes and we'll see whether or not we get any follow through on this. So here we go with yet another number 2 signal on the Raptor. Like I said, the only nice thing about the counter trend signal is that it gives us an obvious place to cover the trade, right? We know if the market trades back through the lows, yeah, we're on the wrong side of this equation, may as well take our stop out. Because it is counter trend, however, I would probably default to manual mode and just throw in a single. I don't think I would go too crazy buying this market up in such a strong downtrend. Once we get above 5104, we'll get a little bit of breathing room. Oh my gosh, can we not even make one new swing high? Micro swing high? Is that too much to ask? Can we not trade 5102? Well, they're just going back and forth here. Well, I think we're going to close up shop here for this morning. Um, we're obviously in a little bit of a sideways range, and well, I need to see the market at least trade above 5102, which it seems very reluctant to do. Overall, the trend is still down, however, so don't be surprised to see the market trade back down through these lows, which would be a little bit unfortunate, but that's trading for you, especially when you try to trade counter trend. We'll do it all again tomorrow. Reminder that tomorrow we're going to be focusing a little bit more on the Raptor and the number 2 signal in particular. And I'll see you then. All right, have yourselves a wonderful day. Talk to you soon.